what we saw in 2008 was when one big bank and a couple of others started to fail, could not pay their depositors because, one big banking card easily starts tipping over other cards. It's a house of cards. I think that this is the biggest economic news today, and the fear that we're going to be in deep trouble.
Innovative financial institutions have faced significant difficulties this week. Silvergate Bank, a California-based bank that provided financial services to businesses in the digital currency and fintech industries, has announced the gradual cessation of its bank operations. This bank had made a significant investment in serving the emerging crypto economy since 2016. State regulators have also shut down Silicon Valley Bank, SVB, which has been providing financial services to venture capital-funded startups for a long time. Silvergate Capital Corporation was a publicly traded bank holding company based in California, USA. It operated through its subsidiary, Silvergate Bank, which provided innovative financial services to businesses in the digital currency and fintech industries. Silvergate, which was a prominent player in the crypto industry, had to announce its closure and deposit returns. The bank announced its voluntary liquidation on March 8, 2023. Silicon Valley Bank was a commercial bank that provided financial services to technology and innovation-focused companies. It was founded in 1983 and is headquartered in Santa Clara, California. The bank offered a range of services, including venture capital, private equity, and asset management. U.S. regulators announced the closure of SVB on March 10, 2023. Banking regulators in California have appointed the Federal Deposit Insurance Corporation, or FDIC in short, as the bank's asset receiver after closing the bank. This news is being seen as a sign of a global recession in the world market. Silicon Valley Bank was the 16th largest bank in the U.S. The bankruptcy of SVB is considered as the biggest financial crisis since the collapse of Washington Mutual and Lehman Brothers during the 2008 recession. Both the banks, Silvergate and Silicon Valley Bank, share a common cause to their downfall. Both banks faced the same issue of traditional bank runs due to declining deposits and increased cash withdrawals from customers, including tech startups and crypto exchanges. This was partly due to challenging economic and financial conditions, as well as market volatility that impacted their non-cash holdings. A bank run is a situation where a large number of depositors withdraw their money from a bank due to fear that the bank may become insolvent or unable to meet its financial obligations. This can result in a liquidity crisis, potentially leading to the bank's failure. As cash demands increased, both Silvergate and Silicon Valley Bank were forced to sell the assets backing their investments at significant losses. Silvergate reported a loss of $1 billion in the fourth quarter of last year, while Silicon Valley Bank, with a larger balance sheet, lost $1.8 billion while liquidating assets. U.S. Treasury bonds were a significant component of the money-losing liquidations in both cases. Banking regulators in California have appointed the Federal Deposit Insurance Corporation, FDIC, as SVB's asset receiver after closing the bank. The FDIC is a United States government agency that provides deposit insurance to protect depositors in the event of a bank or savings institution failure. FDIC insurance covers deposits up to a certain limit and helps to maintain stability and public confidence in the banking system. The major reason that led to the collapse of both banks is bank runs. Due to challenging economic and financial conditions, customers of these banks, such as tech startups and crypto exchanges, are encountering various business challenges, resulting in reduced deposits and increased cash withdrawals. Additionally, the bank's non-cash holdings are being impacted by market turbulence. Silvergate's downfall can be attributed to a simple gamble on cryptocurrencies, with a focus on attracting large deposits and other business from crypto exchanges. One of the bank's significant clients was FTX. Another potential threat to bank stability that appears to be widely overlooked is the rise in inflation. Inflation erodes the value of money over time, and if not addressed, can lead to a situation where people lose faith in the currency, causing it to lose value rapidly. This can lead to a liquidity crisis, as people scramble to convert their money into more stable assets, such as gold or real estate. Banks, especially those heavily invested in long-term assets, can be particularly vulnerable to inflation, as their returns are fixed, while their costs increase with inflation. Another major crisis that Silicon Valley Bank faced was the increase in interest rates. SVB had purchased long-term bonds with interest rates of approximately 1.5%. These bonds were purchased for a period of 10 years. But, after the Fed increased the rates, people easily got bonds for higher rates of interest. Silicon Valley Bank had to sell its bonds for huge losses. This added the last nail in the coffin and led to shutting down its operations. In conclusion, the collapse of Silvergate and Silicon Valley Bank is a significant event that underscores the challenges faced by financial institutions in today's rapidly changing economic landscape. The bank's demise can be attributed to a combination of factors, including bank runs, asset-liability mismatches, COVID-19 disruptions, and Fed rate hikes. As the global economy continues to evolve, it is likely that we will see more banks facing similar challenges, highlighting the need for innovative and adaptable financial institutions that can navigate these uncertain times. Thank you for watching. Please let us know your thoughts in the comments below. Do not forget to subscribe and share.